This video is to explain what happens during the underwriting process. The underwriting process of validating, it's essentially validating the information on the loan application. The loan application has your personal information, it has what you make, it has what you have in the bank, and it also has all the stuff listed on there on what you're in your credit. When the underwriter is reviewing your file, they're validating that your income is your income, your assets are your assets, and there's nothing on your credit report that the computer didn't pick up that they were supposed to pick up. So they're going to go through your credit report. In the process of underwriting, once they validated that basic information, they may have additional items that they request because there's something on your bank statement that requires it to be explained. So they may say, what's this large deposit from? Who did this come from? What does it look like? And then get the documentation around that. Same way with your income, they may have additional questions and need to have an employer break it down or need additional documentation around that. The way that I like to explain underwriting is like a back and forth where the underwriter will get the information, they'll review it, they'll tell you what else they need. Then if there's another round that's required, then they'll ask them more questions. You turn that stuff in, and then eventually what you're going after is the clear to close. So sometimes it takes 2 rounds with the underwriter, sometimes it takes 3. So it just depends on how clean your loan file is on what information is needed. But you're eventually going to get to the point where you're like, oh my gosh, I have to get the report card for my 3rd grade, what I scored on my history test. It does get minutia sometimes where you got to get some really crazy stuff. But in regards to like the loan, they're lending you the most money that you've ever borrowed in your entire life. So they're going to ask questions about it. They're not just going to hand you $250,000 and say, here you go. It's going to take them to go through and make sure they check all the boxes, dot all the I's, cross all the T's to make sure that there's not going to be a question on whether or not you're going to pay back the loan. Their biggest concern is they don't want to put somebody into a position where they can't afford the place that they bought. That's how. If you like this video and want to learn more, feel free to follow me and also check out some of my other videos. Usually my content deals with investments, real estate, mortgages, new construction, generational wealth, finance, impossible goals. Those are the things I like to talk about.